Hello everyone, welcome back in accountancy class of higher secondary first year commerce. So in today's class we will record some of the transactions in journal. So before starting my class I would like to give some of the introduction of so we can say that memorize the last classes. So in the last classes I have discussed what is account, what is journal, what is golden rule of debit and credit, what are the classification of accounts, and what are the process of journalizing, because whenever we have to record the transaction we have to follow the process of journal. So in journal we will record the transaction that happen in our business, and this recording is called bookkeeping. And there are two systems of bookkeeping, one is double entry system and another is single entry system. So in our accountancy we will record all the transactions in our books of accounts by following the double entry system of bookkeeping. So we can say that double entry system of bookkeeping is that from every transaction we have to record twofold aspect. One aspect is debited and another will be credited. So from every transaction we have to identify the two account heads affected by this transaction. So what is the process of journalizing? So journalizing is the process of recording all the business transactions in journal, and there are three steps of journalizing. One is identification of account heads. That means from every transaction we have to identify two account heads affected by the transaction. So first step is to identification of the account heads. Next one is the finding out of the which type of account is that. That means after identifying the account heads we have to find out what type of account is that, whether it is a personal account, whether it is a real account, or whether it is a nominal account. This is the second step of journalizing. And the last step of journalizing is the application of debit and credit regarding this account. That means if one is personal account, then the debit is the receiver of the benefit and the credit is the giver of the benefit. And if it is a real account, then what comes in debit and what goes out credit. And if it is nominal account, then we can say that all expenses and losses are debit and all incomes and gains are credit. So this is the process of journalizing. I think it is a very easy steps which consist of three stages. One is the identification of account heads, next finding out which type of account is that, and the last one is the application of golden rule of debit and credit. And if we follow these three steps, then we can record all the transactions in our business, in our journal. So in business we have to record transactions in three books of accounts that I have already discussed. One is journal, another is ledger, and another is trial balance. So in order to record the transactions in ledger and trial balance, we have to first record all these transactions into journal. And journal is the books of original entry, because whenever any transactions happens in our business, the first it is recorded in journal, then it will be posted to ledger, and at the end of the year we have to find out the trial balance. That means we have to check that is the debit side is equal to credit side. So in our today's class we are going to record 10 transactions in our journal by following the process and steps of journalizing. And I will draw the journal, and then I will give transactions one by one, and we will record it in journal. So let's start our class. So first we have to draw journal. So I think all of you know how to draw journal. So journal, okay. So this is the journal, and this column is called date column. This one is the particulars. This one is the LF, that means ledger folio, because from journal we have to record these transactions in the ledger. So when we will record these transactions from journal to ledger, then we will use this column, and otherwise we will not use this column. So in our practical, in our journal, we don't use this column, but it is as it is the format, we have to show this column. Next one is the amount, and it is also amount. Okay, so we can write in full amount. Okay, so now we can say that, you can say that why two amount column. So from every transactions we have to identify the two aspects. One is debited and another will be credited, but the amount is same. So one is debit amount column and another is credit amount column. So it is debit, and I think you know that debit is the short form of debit is DR and short form of credit is CR. And what it is our journal. Journal of a car journal, it is the journal of business. So in the top we have to write the name of the business. So it is the in the books of ... because I don't know the whose business, whose journal is that, or the name of the business, but it is the business, it is the journal of one's business. So we have to write the name of the business in the top. It is the in the books of ... that means in the books of name of the business. So in business we have to record all the transaction in the books of accounts. So it is one of the books of accounts, that's why I have written it in the books of ... If the business name of the business is mentioned, then we will write in the books of that person. Okay, so clear. So first transaction, what we are going to record, the first transaction is like 1/4/2020. That means the first transaction that happens in our business on 1/4/2020, and the transaction is the started business with capital, started business with capital of rupees 10,000. Okay, so whenever I will write the transaction, you at the same time you should write it in your copy, and then we will give journal entry regarding this transaction in our journal. So what is the first transaction? The first transaction is the started business with capital of rupees 10,000. So it means that, what is capital? Capital means any amount brought in by the businessman in order to start the business. Okay, so I have discussed in what is capital. So whenever any business starts with capital, so from this it is the opening transaction, because in order to start a business we need capital. So what will be the entry for that? So from this transaction we have to identify the two account heads. So as started, no account, business with capital. So capital is one account head. So one is capital account, and rupees 10,000. So how the person, the businessman will bring the capital? He brings the capital in cash. So one is capital account and another is cash account. So the amount brought in by the businessman, in order to start the business is called capital. And how he can brought this amount of capital? He brought the amount of capital in cash. So one is capital account and another is cash account. So capital account falls, we have to now we find the first step of journal, that is the identification of account head. So one is the capital account, another is the cash account. Now we have to see what type of account is that, whether it is a personal account, real account and nominal account. Remember, capital account is a personal account, and cash account is a real account, because cash is our asset. So we have find that one is personal account, another is real account. Now we have to see, look which account will be debited and which account will be credited. So what is the rule for personal account? For personal account, debit is the receiver of the benefit and credit is the giver of the benefit. So in this business, the capital is contributed by the businessman. capital is the brought in by the businessman, so we can say that the businessman is the giver of the benefit. The amount is given by the owner, so capital is the credited because it is the giver of the benefit, and the cash comes in our business. Rupees 10,000 cash comes in our business. So for real account, what comes in business is debit and what goes out of the business is credit. So when the business is started, amount of rupees 10,000, the cash of rupees 10,000 comes in business, so it will be debited. So one is debited and another is credited. So what is the transaction? Our transaction is on 1/4/2020 and it is the started business with capital of rupees 10,000. I think all of you have written the transaction in your copy, and now we have to record the entry for that. So one is capital account, another is cash account. So capital account will be credited and cash account will be debited. So for your information, when any business is started, remember capital is always credited. So whenever any business started, cash account debit to capital account. This is the first transaction, and the date of the transaction is 1/4/2020. 1/4/2020. 1/4/2020. So what is the entry? Cash account debit to capital account. So what is the amount? 10,000. So one will be debited, another is the credited. So debit for this we write 10,000 and the credit we write the 10,000. What will be the narration? Being business started. Being business started with cash. So this is the complete of our first entry. It is the cash account debit to capital account. Being business started with cash. Remember, every journal entry for every narration we have to start the narration with being. So being business started with cash. So next, what is the transaction? It is the transaction on 2/4/2020 and the transaction is purchased goods for cash. Purchased goods for cash, rupees 5,000. Okay, so this is the transaction on 2/4/2020, that is the goods purchased for cash, rupees 5,000. So from this transaction we have to identify. So what we have to identify? First we have to identify the two account heads affected by these transactions. So what is the transaction? Purchased goods for cash, rupees 5,000. So one is the purchased goods, that means goods purchase koreche. So whenever the business purchase goods, that means any article which is purchased for resale. So in that case, that business purchase goods. So whenever the business purchase goods, the name of the account affected by the transaction is purchase account. One is purchase account. Okay. Next one is the cash, because they have purchased the goods for cash. So another is cash account. Okay, so I have identified the two account heads affected by the transaction. So next step is to find out the type of the account. So purchase means our expenses. When we have purchased goods, the amount is incurred by me, that means ami khoroj korechi, so it is my expenses. So expenses falls under nominal account, so it is nominal account. And cash, we know cash is our asset, so it is real account. Okay, so we have identified that one is nominal account, another is real accounts. Next step is to check that. Next step is to apply the golden rule of debit and credit. So remember, what is the golden rule of debit and credit for nominal account? So for nominal account, debit means all expenses and losses. Debit means all expenses and losses, and credit means all incomes and gains. So nominal account, it is the purchase, so it is the expenses. So expenses, all expenses and losses are debited, so it is the first one is the debit. And cash is our asset, so it falls under real account. So what is the rule for real account? What comes in debit and what goes out credit. So whenever we purchase goods, that means our expenses, so we have not received any cash, we will paid cash, that means the cash goes out from my business, so cash will be created. So what will be the entry? Purchase account debit to cash account, and our transaction is purchase goods for cash rupees 5,000. So what is the transaction? What will be the entry? Purchase account debit to cash account, and the amount will be rupees 5,000. And the nation is being goods purchased for cash. Okay, clear? Purchase account debit to cash account, being goods purchased for cash. Next transaction on 5 April 2020. Okay, sold goods for cash rupees 7,000. Okay, so in earlier transaction we business purchased goods, so we know the definition of business is that purchase, and the business means the buying and selling of goods and services. So if the business purchase goods, that means it will sell the goods in future. So in the transaction it is sold goods for cash rupees 7,000. So similarly we have to find out the two account heads affected by the transaction. So sold goods, so in the earlier transaction they have purchased goods, so it is the purchase accounts. So whenever they will sold goods, it will be sales account. It will be sales account for cash, another will be cash account. Clear? So we have identified when the business sold goods, so it will be sales account, and when the business purchased goods, it will be the purchase account. Next we have to identify the what type of account both of these. One is sales. Sales, what means sales? Sales means I have certain amount of goods. Suppose I have sold goods rupees 7,000, that means I have received 7,000, so cash comes in business. Okay, so say if purchase is expenses, we can say that by selling we will earn income. ठीक है से? So sales is our income. Sales is our income. So purchase is our expenditure, that means whenever we will purchase something, it is our expenses, that means আমরা খরচ করেছি, যে সময় কিছু সেল করব আমি এগুলা ইনকাম করেছি, যেটা আমি সেল করার পর রিসিভ করব এটা আমি ইনকাম করেছি, so sale is income. And cash, so income falls under nominal account, so it is nominal account, because in nominal account all expenses and losses are debit and all incomes and gains are credit. So sales is our income, so it is credited. And cash account means cash, when we will sold goods to customers, the customer will pay us the money, so cash comes in the business, so it will be debited, because for real account it is the rule that what comes in debited and what goes out credited. So we can say that cash account debit to sales account. So the transaction is sold goods for cash rupees 7,000, and the entry is sales account sales account is credit because it is the income, and in nominal account all expenses and losses are debit and all incomes and gains are credit. So sales is our income, so it will be credited, and cash comes in our business because by selling we will receive money. So cash comes in our business, so it will be debited. So the transaction, so the entry will be cash account debit because cash comes in, to sales account because sales is our income, rupees 7,000. being goods purchased, goods not purchased, because we have sold goods, so being goods sold for cash. Okay, so this is the entry for the transaction, that is goods sold for cash rupees 7,000. Then next transaction on 7/4/2020, purchased furniture for cash rupees 7,500. Okay, that means in that case business purchased furniture. And why the business will purchase furniture? Business will purchase the furniture for its use. So whenever any article which is used by the business, it is our asset. And how they will purchase the furniture? They will purchase the furniture for cash. So what will be the accounts affected by the transaction? Purchased furniture. If the business purchase goods, then the account will be the purchase account. But in that case the business purchased asset, because furniture is purchased for use in the business. So furniture is our asset. So whenever the business purchase furniture, the name of the account is affected by the transaction is that asset account. So it is the asset account, furniture account, because in that case the business purchased asset and the name of the asset is furniture. And how they purchased it? They purchased by cash. So another will be the cash account. So I have identified the two account heads affected by the transaction. Now we have to look for what type of account is there. So furniture account. Furniture is asset, real account. Cash is also assets, it is also real account. Now we have to apply the golden rule of debit and credit for real account. So what is the rule for real account? What comes in debit? So in that case the business purchased furniture for cash. So furniture comes in the business debit. And how they purchased it? By payment of cash. So cash goes out of business. So cash will be credited, and the transaction is furniture account debit to cash account, and the entry is furniture account debit to cash account, and the transaction is purchased furniture for cash rupees 7,500. Furniture account debit to cash account, and the amount is 7,500. And the narration will be being what they have purchased, goods or furniture? Furniture. Being furniture purchased for cash. Okay, clear? Entry complete for 4 transactions. Okay, so let's see what is the next transaction. So I am erasing this. I think all of you have written it in your copy. Next one is the purchase goods. It is the 10 April 2020. Purchased goods from Mohan rupees 10,000 on credit. Okay, so this is the transaction. So what is the transaction? Purchase goods from Mohan rupees 10,000 on credit. So first we have to identify the two account heads affected by the transaction. So what they have purchased? Purchased goods. So whenever the business purchase goods, the name of the account affected by the transaction is purchase account. Purchase account. And the next one is the when we will start business. So in our business there are two types of transaction. One is cash transaction, that means when we will pay the money immediately, and another will be the credit transaction, that means we will not pay immediately or we will not receive immediately, and this transaction is called credit transaction. So we can say that যেটা মিনিং হলো ট্রানজেকশনের, যে বিজনেস কি করেছে, গুডস পারচেজ করেছে কার থেকে, মোহনের কাছ থেকে। যে মোহন হলো আরেকজন পার্সন যার কাছ থেকে আমরা গুডস পারচেজ করেছি। কিভাবে পারচেজ করেছি, বাকিতে পারচেজ করেছি। তো একটা অ্যাকাউন্ট কি আমাদের পারচেজ অ্যাকাউন্ট, এন্ড হোয়াট উইল বি দ্য অ্যানাদার অ্যাকাউন্ট, from. So by from there is no account Mohan, so another will be the Mohan account. Mohan account. And one thing, remember one thing, Mohan account, and one is purchase account, another is Mohan account. So I have identified that two account had affected by the transaction. Now we have to find out what type of account is that. So we know purchase account is nominal account because it is our expenses. And Mohan is the natural person, so natural person falls under personal account. Personal account. Okay. So what is the golden rule of debit and credit for nominal account? For nominal account, all expenses and losses are debit. So purchase expenses, so it is debited. And Mohan account is a personal account. And what is the rule for personal account? Personal account, the debit means the receiver of the benefit. So in that case, we have purchased goods from Mohan. That means Mohan will not receive anything. Okay. Instead, Mohan will the giver of the benefit. So what is the golden rule of debit and credit for personal account? The debit means the receiver of the benefit and credit means the giver of the benefit. So in that case, Mohan will sold goods us. That means Mohan is the giver of the benefit. So he will be created. So what will be the transaction? Purchase account debit to Mohan account. Purchase account debit to Mohan account, and the transaction is purchased goods from Mohan rupees 10,000 on credit. So the entry will be purchase account debit to Mohan account, and the amount is 10,000. Okay. The next thing, the important, we have to remember that for all the entries like cash account, with cash I have given account, with capital I have given account, with purchase I have given account, with cash I have given account, again with purchase I have given account. But when we will record the transaction related to personal account, that means for natural person, that means Ram, Sham, Jodu, Madhu, Akbar, Salim, Mohan, etc., we will not write account. So with natural person we will not write account, just we will erase this. That means purchase account debit to Mohan. With natural person we will not write account. Okay. So what is the nation? Being goods purchased from Mohan on credit. Okay. So this is the transaction we have recorded. So in this class we have record 5 transactions in our journal. So I think all of you have understood it well, and all of you should try some of the transactions, that means recording of transaction in journal from your book, and if any confusion I will solve in the next class. Okay. So in the next classes we will record some other transaction in our journal. So till then, thank you.